Hi everyone, this is Latorian Paul coming with you with some more Forex and keeping it simple. So today I want to talk about something that I have never heard, but I've noticed something that will help a lot of people trade um, in an even more simple way. We all know about the top-down analysis, but what I'm coming to you today with is the bottom-up analysis. What that means is going from the smaller time frames up to the bigger time frames. Why is that so important? Well, going from the bottom up is important when it comes to direction. Yes, you have the overall move, but it's impossible to have overall moves without smaller moves. If you were taking a trip to anywhere, you may have a generalized direction of which way to go, but in that overall journey, there are small turns left and right to get to that overall experience. So today I'm talking about bottom up analysis, and we're doing that for the sake of getting the most out of our day. Depending on what pair you trade, you may not be able to get the most out of your day if you are looking at the current time frame you're in. So what I'm going to do is take you into a deep dive on the M1 time frame to discuss direction. And I'm only going to look at the day that we were in, okay? And I'm going to show you some things that most people probably would never see or think it may think it's a waste of time, but I'm telling you, it's going to help you look at things in an even better situation. Now, when we're talking about direction is, for me, is based off the moving average crossing, okay? So moving average crosses, all right? Now, most people don't trade a range, but even in a range, there's a direction. There's always some type of direction, either up or down. Sometimes it may not look that way, but even in the ranging, in order for it to be a range, there must be a downward move and an upward move. So the first thing I see, you see a moving average cross here, and I'll just mark the moving average crossing with a vertical red line. And I'm doing that to help you to see the direction, okay? As long as the moving averages do not cross, you continue in that direction. Once they cross, you have to be able to change. Let's go, keep on going. Okay, now that we have some direction, all right, we had this going down, and after we see it going down, what I do was, the way that I trade, and keeping it simple as always, whenever the moving averages cross, I'm looking for a breakup structure and some type of retest of structure to even consider getting in the trade. So in this case, it breaks here. It already broke this low. All right, pull back up here. I'll enter to the sell. Now my take profit will be here because that's what already given. Even though they gave us 2 pushes, I'm cool with that 12 pips. All right. Now get out. Guess what's going to happen? Another moving average cross. Once the moving average cross again, we're looking at a trade where, because it crossed up, we're looking to enter at a higher low. Okay. So we got this. We got the breakup structure. Price came back, gave us this. You enter here, 16 pips. All right. And then you have it again. Cross, breakup structure, retest, 17 pips. And then it comes back and it continues to drop. You had this trade, 19. It broke a structure, it broke some more structure. It's still going down. So I'm only looking for shorts. Comes back up here. It broke this, came back up, and goes down. Everything is going down. All right. Now, what you don't want to ignore, and this is for those who trade the TDI. Everybody doesn't trade looking for divergences, because in order for you to have a trend change, you must have a slowing of one direction's momentum and an increase in the other direction's momentum. It's pretty kind of straightforward. So if you got this is a head and shoulder pattern. It can be a head, no, shoulder, head, shoulder. And then you got shoulder, head, shoulder. From left to right, this is going down, this is going up. Okay, so if I'm in this trade, I get this low, I'm getting out at this low, and then I can either get in for the buy or I can wait which is the whole purpose of this video, is to show you why that you can wait without having to rush anything. So price breaks, moving average cross here. You got a break of structure here. I'm in that trade, and it keeps going up. Keeps going up. 110 pips. Now, mind you, on a bigger time frames, this is a trade you're looking for, because right here is where you have a retest of a previous structure on a bigger time frames. We'll get to that later. Here we have a moving average cross. Here's an entry for the sale. One thing I also wanted to mention is that because market makers know that most people trade market structure, you always have to set or have to expect for the retest to go a little bit deeper as far as a pullback into price. So even though we have breaker structure here, the retest pull way up into there, right? So if anything, you don't want to trade with your lot size to the point that you can't handle a 15, 20 pip stop hunt, ultimately to continue down, right? So if I look at this, if I got in here and it continued down, I'm good. Now going to the bigger time frame, as I said it before, keeping it simple as always, this was a trade that we wanted anyway. On a downtrend, we're looking for M's. Even though this was a W, the ultimate setup is the M, meaning that I can't get caught up and the second leg of the W if the overall trend is down. How do I know the overall trend is down? I know the overall trend is down because moving average cross a few weeks ago, a few days ago, forgive me, this is a 1 hour chart. A few days ago, and it hasn't crossed since. So any pullback to this area, especially you're looking at not just the moving average, but I'm looking at market structure. So any pullback to this area where we had previous moves is an area of interest for a continuation. All right, that's really all it is. So and ultimately looking at the M1, even though you had some upward movement, the ultimate entry was here, and then it continued to play in the bigger move. All I'm saying is, in order for you to have these moves, you have to have the smaller moves. So don't allow just these big moves to be big and think that it's just going to be some massive move without having smaller moves. All the moves play a part. So that's really all. If you want to get some more details into it, watch it again and understand that in order for you to have these big moves, you got to have the small moves. Okay, you may not want to go to the M1. You may want to do the M5. It's still the same thing. There's going to be a cross here and a cross there. And after the moving average cross, you're looking for entries at structure points, structure breaks and retests. So it crossed here, and I'm not even considering entering a sell until I see price come back to this area that it was broken. I get in here, and that's 60 pips. All right. Same thing on this side. Price breaks, moving average cross, come back to structure point, easy 50 pips. Does it again, cross, break structure, enter for the buy. That's all I'm doing. Keeping it simple. You guys have a great day.